Okay. Hi, everyone. Good morning, and welcome to today's webinar on the Tata Nifty Midcap 150 Index Fund. We're here with Ms. Shaily Gang, Head of Products and Alternates at Tata Mutual Funds. With 18 plus years of experience across wealth management and product strategy, she brings deep market understanding and a sharp product lens. Today's session is going to be all about why midcaps are buzzing and how this new fund can give you simplified access to India's emerging champions, which is just in time before the NFO closes. Over to you, Shelley.
Hi, Neha. Glad to be here and talking to everyone.
Yeah. Okay, so let's just dive right in. I have a set of questions. So I think we can just get started. So, why is now a good time to look at mid cap investing in India, right? What is driving this segment?
Yeah, I think an important question to ask, what is driving this segment? So mid-caps actually house a lot of those companies where the government focus is there currently in terms of PLI, in terms of manufacturing, defense, government spending, fiscal spending, increasing the capital expenditure. So a lot of companies, are housed there, and that's the biggest thing which would be driving mid-caps over the next, few years, maybe 5 to 10 years. From the valuation perspective, yes, mid-caps have run up in the last, couple of years more so. But because of this focus, which is there of the government, a lot of action is expected to happen and continue to happen in the mid-cap space to the PLI benefits would start accruing, and they've already accrued in a couple of sectors, and they would start doing, it more to more sectors. It would start showing up in more sectors. We have already been seeing a lot of order inflows in the defense side. On the defense side, more is expected to come in and the like. So that's something which is, critical about the mid-cap space. Yes.
Okay. So, what exactly is the Nifty Midcap 150 index, right? How is it constructed? How is it built?
So it's a market cap based index, yes. And Nifty has the universe of 500 stocks again on market cap. So Nifty 500 is the universe from which the Nifty 100, which is a large cap space, is culled out and taken away. So the top 100 stocks, which are the large caps, obviously they don't form part of the universe. For the next 150 stocks, the way to choose is. Let's say it is chosen on the basis of free float market cap, last 6 months average free float market cap. However, let's say we have a 150 set or set of 150 stocks, a set of 150 stocks already existing currently, and there is a rerun happening to see whether these stocks are the ones on a regular basis. So on the rerun, what happens is the stocks which are ranked 101 to 225, they for sure will be part of the index. If the stocks fall below 275, they are surely excluded. So you have a minimum inclusion list and a exclusion list for sure. The stocks which are there between 250 to 275 rank, though they are not in the top 250, which means they are not part of that 150. However, some buffering is given to those, that if they lie between 251 rank and 275 rank, they would still continue to exist unless they fall below 275. This kind of buffering is required, so that there is not too much of churning which is there in the portfolio. Yet the true mid caps are represented well in the index. So this buffering actually helps the turnover piece a bit, because finally the index has to be executed. It has to be replicated by the index funds and the ETFs. So that's a very, very critical thing. But yes, in a smaller summarized form, Nifty Midcap 150 is chosen after excluding the top 100 stocks, and then based on the free float market cap, the 150 stock, the next set of 150 stocks are formed.
Okay. Okay. So, but how does mid cap space differ from large caps in terms of things like sector allocation and in terms of growth potential and all of that?
Yes, a very pertinent question here again. Till some time back, large caps and mid caps, the profile of liquidity, the liquidity profile for these two segments were somewhat different, and the illiquidity discussion used to come in, in case of mid caps. But now, the liquidity profile of large caps and mid caps has kind of converged, and the sector allocation is something which makes the mid caps differ from the large caps. For example, the mid cap space is has higher allocation towards capital goods, towards healthcare, towards reality, towards chemicals. These are the sectors where it has higher allocation as compared to large caps. And again, in comparison to large caps, the mid cap space has lower allocation towards financial services, oil and gas, FMCG, IT. So, like financial services, it still has 22%, but it has lower allocation as compared to 34-35% of large caps. So, this is how it differs. Plus, mid cap space has a few more sectors, 3 to 4 more sectors where large caps are, absent. More
Right.
so when you break it down into basic industries, which is sub industries, mid cap space has about 40%, 40 basic industries which are unique to them. And you have lead. So one is unique, and the other is you have leaders in mid caps basically which belong to let's say a consumer durable AC space, or a industrial explosive space, which is company which manufactures ingredients which can be used to blow up the construction sites and in mining, and it can also be used to propel warheads and ammunition. So so that's kind of a leader company sitting in mid cap. You have companies which are leaders in the space of AMC, in the space of exchange data and platform, in the space of QSR, which is quick service restaurants, in the space of household appliances. There are these leaders, or at least if they are not leaders by revenue, they are still in the top 2 or 3 in the segment, and or they could be companies which have a niche product or a service offering, which all of these are housed in mid cap space. So if you were to just quickly scan the mid cap space and see how, in 4 words or 5 words, how do you define it? One, they have industry leaders in few segments which are listed. Two, they have certain niche segments which are housed in mid caps. Three, they house a lot of those companies where a government focus and a government spending focus is there. So that's how it differs from large caps. And because it differs from large caps in this manner, when you bring in mid cap index or a mid cap segment to the core portfolio, it really adds a lot of value.
Okay. You already answered my next question
Oh,
about industries and themes, which are, unique.
we can,
But we can move
oh,
on.
okay, themes. Yeah, themes. So we did talk about sectors and we did talk about sub-segments. In terms of themes, if you were to, take the theme lens, then you have China plus one theme, which can be played very well through the mid-cap space, through electronics and semiconductors, which again has a PLI focus. You could play this through the lifestyle theme, which is media entertainment, which is and the building materials like cables and plywood, basically building materials. You could play this through restaurants and hotels, dine-in restaurants, quick service restaurants, hotel, mid-cap hotel companies. So that's the lifestyle space. You could play this through the healthcare, which is the hospital space, which is prominent here. You could play this through the domestic space, which is through the fintech, which is AMCs and some fintech companies, the exchange data piece, the industrial goods piece. So that's how you could take a theme lens and see what all can be covered here.
Okay. Okay. Can you also explain how Tata Nifty Midcap 150 Index Fund gives investors access to these opportunities in a passive way?
So, yes, active versus passive is not the case for us, and we've been focusing on passive as well. We have a large active book, and we've been focusing on passives in the last, 3 to 4 years, and we yet and as in we do not recommend, active versus passive. We truly believe that it is active and passive together. If there is a space which needs to be captured from the investments, theme perspective or from the bucket perspective, it can be captured very well through both. It should be captured rather through both active and passive to diversify, because we feel that these are two different approaches. One, which is an active space, it's an approach which is standing firm and tall on the judgment piece, which is where do you want to take overweight, underweight, whether it's a broad-based index or whether it is a theme or whether it's a sector. You always have pockets where active fund will take overweight, underweight decisions. And on the other side, you have passive where you have to replicate, and it's a discipline, it's more of a discipline pillar on which passives are built. And, you could cover very, very large, areas. And for example, when we talk about infrastructure and manufacturing theme, they have a lot of sectors to cover. So it's good to cover in a disciplined manner all the sectors, the PLI sectors, which touch the manufacturing space through the passive route, because everything would be covered. Likewise, midcap also has a midcap space also has a large number of sectors, some 18 to 20 sectors, and a lot of basic industries. So it's good to cover the midcap space through in a disciplined manner through the passive way, while you could also cover, and you should also cover the midcap space through the active route as well, by taking overweight, underweight on certain pockets, on certain sectors, on certain basic industries. So it's basically a great way to diversify this way of investing, and the investing philosophy, between active and passive.
Okay. So historically, right, how has the performance of mid cap indices compared to large cap indices like Nifty 50 and Nifty 100? How has it done?
Uh, Midcap 150, on a rolling return basis, if you see, it has outperformed the large cap space by about, you know, maybe 3.5, 4%, 1 year rolling, 3 year rolling, 5 year rolling data, if you were to see. So, but at the same time, I would like to mention that even the standard deviation or the volatility is higher. So let's say if the large cap space carries a volatility of about a 3 year volatility of between 12 to 15%, then a mid cap space would carry 3 year volatility of maybe between 17 to 20, 21%, and small caps would be higher at 23 to 25%, and micro cap would be higher again at 25 to 28%. So that is how the risk return goes hand in hand. But yes, on the performance basis, mid caps tend to outperform large caps, because there is a lot of re-rating potential which is there within the mid cap space. Earning surprises coming in because of the see, you have a lot of information efficiency within the large cap space, and there the changes, and the price changes are very, very fast. That space is very nimble because the information flow is very fast and everything gets quickly priced in. In mid caps, yes, there is deep down research which is happening, but the space is, still as compared to large cap, the information efficiency and the flow is not as smooth. And that is why you have a room for earnings surprises coming in there. And that is why the re-rating potential which comes in. So the returns, earnings expectation, and the net price return is expected to be higher in case of mid caps as compared to large caps, which is what we've seen in the historical data also.
Right. Okay. But are there any concerns about valuations in mid caps today, right? If I was a long term investor, how should I be viewing it?
Yes, valuation is a very important consideration when anyone looks at investing. Mid caps currently are not cheap. They are relatively, so they are at about 30 x 1 year forward P, whereas the long term 10-year average P is about, I think, 23. So definitely it is expensive. However, mid caps have a lot of potential in them, and the market places a lot of confidence in the growth potential of mid caps, and that is why there have been years like FY 18, 19, 21, 22, and even the current year where the 1 year forward PE has actually been more than 2022. However, the next 3 year returns also have been double digit, barring just one year, I think FY 19 or something, 1 year. So, that is the kind of potential, and that's the kind of confidence which market places in mid caps. And because of the first part of the conversation that we said, why mid caps? What do mid caps house in themselves? So because of that, the market places a lot of confidence, and even if the multiple is relatively higher than the 10-year long-term average, there is a potential for the price return to come in the next 3, 5, and 10 years for sure.
Okay. Okay. What's the typical risk to return profile on this fund, and how can investors manage volatility?
They could do SIPs. So we did speak about the comparative volatility which is there in large caps, mid caps, small caps, and micro caps. So yes, mid caps lie somewhere in between. Actually, mid caps are very well placed in terms of between large caps and mid caps. Mid caps in terms of stability of returns. It has, it shows relatively a higher growth potential than large caps, but it shows higher stability than small caps. It's very, very well placed. And from a long-term perspective, of course, it is more volatile than large caps. So for the clients for whom the cap is the large cap volatility only, they could do, systematic investment plans into, a mid cap index fund or even a mid cap active fund. I would suggest that.
Okay. Okay. But how can this fund fit into like a diversified portfolio, right? Is it suitable as a core or satellite allocation? What do you think?
Oh, I think every fund should be discussed, in this manner. And I'm glad you're asking this, Neha. If we take an overall lens, a bird's eye view of the overall 100 rupee portfolio, let's say, let's say it is 80 equity and 20 fixed income. I'm taking that as an as an example. And amongst that 80%, you could say again, it could be, 80%. So it could be that 80 could be divided as 55 into, let's say, core, and 25 into satellite. And that core again can be divided as active and passive, and satellite should again be divided as active and passive, depending, how, investors want to do. Now, mid cap 150 should be part of the core portfolio. And let's say on the core side, if you are taking right now flexi cap and large and mid cap, as the core funds on the active side. On the passive side, you could have Nifty 50, which is a large cap, Nifty mid cap 150, and Nifty small cap 250 or BSE indices on the passive side to cover that piece. So again, of course, on the passive side, on the core side, we also have gold. But on the passive side, so mid cap 150 could actually sit under the core portfolio on the passive side very well.
Okay. Okay. So could you please walk us through the final NFO details like minimum investment, SIP, options, taxations, and exit loads, and all of that?
Yes. So this it started on 2nd of June, and this NFO will be ending on 16th, which is today, and it will be again reopening soon. Uh, Minimum investment is 5,000. It's an index fund. And again, additional investment is 1,000 rupees and then in multiples of one. Exit load is bare minimum, about 0.25% within 15 days. But here, exit load, of course, is not relevant because this is a space to be looked at from the long-term perspective. Keep adding on, either through lump sum or keep adding on through SIP. Sit tight, let it compound over a period, let the benefits of fiscal, government spending and, focus of the government keep coming into the segment across 18 to 20 sectors and multiple basic industries. So that's very critical. So exit load is not important, but yes, that is one of the feature. And benchmark, it will be replicating the Nifty Midcap 150 index. Um, so yes, that's about it. Taxation, it attracts equity taxation, the long-term capital gains and short-term capital gains. Equity taxation is what applies here very well. So those are the details.
Okay. Anything else you want to add from your side?
Uh, no, as I think you rightly asked, this could be this could form part of the core portfolio under the passive space. It's important to diversify well between active and passive and capture one space through active, passive both. So that's what we have been recommending. And mid-cap space, as I said, it could have a lot of re-rating potential and it could benefit from the government focus which is expected to come in a lot of sectors on the manufacturing, PLI, defense side. So happy investing to all your investors, and glad to be talking to the Fires team and the viewers and listeners of Fires.
Thank you so much, Shelley. This has definitely been an insightful webinar. But do you want to break it down and sum it up in bite-sized, consumable pieces so that our viewers can get like a final summary?
Sure, I would do that. So we are talking about the Tata Nifty Midcap 150 Index Fund. Why midcaps? I would reiterate that midcaps house a lot of sector leaders in them, whether it is industrial explosives, or it is chemicals, or it is consumer durables, fintech, quick service restaurants. A lot of leaders there. There are some unique industries also which are not part of the large cap space or the mid cap space also. This segment would benefit from the focus of government in terms of manufacturing, PLI, and the capital expenditure. So this segment is expected to have a lot of re-rating potential and earning surprises as compared to large caps. Yes, it would be a little more volatile than large caps, but the earnings potential in the mid cap space is relatively higher as compared to large caps. One important thing which I would like to highlight is that this space has a lot of ownership from the promoter side as compared to large caps, and lesser ownership on the FII side as compared to large caps. So whenever there is a FII outflow happening, this segment is not as impacted as large caps. So in October recently, we saw 20. October 24, we saw a lot of outflows happening. So this space is largely protected from there. Of course, some bit of impact could come in. So that's a unique point again about the mid cap space. So differentiated sector, holdings, overweight, underweight, or higher allocation in certain sectors and lower allocation in certain sectors as compared to large caps. Re-rating potential, government focus, relatively immune from the FII outflow bout when it happens. I think these are the things which are the highlights for the mid-cap space. So happy investing.
Okay. Thank you so much, Shelly, for your clear and insightful session on the Tata Nifty Midcap 150 Index Fund. You really helped us understand the role of midcaps in long term wealth creation and how investors can ride this wave through a disciplined and passive route. To our audience, thank you so much for joining us. We hope you found the session valuable. and consider your next investment step. Until next time, happy investing from all of us at Fires.
Thank you, everyone. Thanks.